Good morning. This is Signal Centres Talking Bull, and welcome to our show. It's the 3rd of August, and I'm on my own today. Joe's not with us, but I'm going to go through the news headlines like we normally do, and then dive into some technicals. If you want me to take a look at any charts that you're interested in or any assets that you're interested in, please let me know, and we'll see how we can get on and hopefully give you some outlook on what we're thinking today. So let's kick it off by going through the news headlines that we normally do. So yesterday's ADP recorded an increase in private payrolls of 324,000 for July again, which is substantially above consensus forecasts, while the June increase was revised down to 455. There was job losses in manufacturing, while there was a surge in leisure and hospitalities for the month. Obviously, the summer holidays a big lead on that. Large companies also cut jobs for the month, while there were notable gains in smaller companies. Annual increase in wages for job stayers edged lower to 6.2% from 6.4%, and the slowest rate of increase since November 2021. Risk appetite deteriorated sharply on Tuesday, with sentiment undermined in part by Fitch's US credit rating downgrade. Strong US data also triggered renewed fears over further Fed rate hikes. Confidence in the global outlook also dipped, with sharp losses for equities and indices. We'll take a look at that shortly. EIA data recorded a huge 17.1 million barrel inventory draw for the latest week, compared with forecasts of 1.1 million, which is incredible. How can you get it that wrong? Although expectations had been revised up after the API data, this was reported as a large inventory draw on record. We'll see how that affects oil markets. The dollar gained support from higher yields and defensive demand amid the slide in risk appetite. Dollar index posted a fresh 3-week high. That's going to affect gold, obviously, to the downside. The latest Chinese data provided some relief, with the Caxton PMI Services Index increasing to 54.1 from 53.9, and well above consensus of 52.5. Overall risk appetite was still fragile during the Asian session. Bank of England policy decision will be announced today. Consensus forecasts offer a 25 basis point rate hike, although a significant minority of banks expect there will be a 50 basis point rate hike. So watching that very closely today. The US ISM service sector data will be released on Thursday. Consensus forecasts are for a limited headline retreat to 53.1 for July from 53.9 previously. Price and employment components will be watched closely on the data. So good morning, everyone. Good morning, Mosh. Yeah, I'll take a look at dollar CAD. Let's dive into what we start off with. Normally, cryptocurrency, although really not much going on. Although we did sort of like for a while yesterday. Retrace quite aggressively. We got down to a level of 28,574, and we smashed back up through the resistance at 29,500. But that's pretty short-lived. Sorry, that was Tuesday's price action. Yesterday's price action was pretty negative, and you see price action moving lower, and we're still below that 29,500 resistance. Trend support comes in at 27,500 today, so that's one to look at. XRP remains under pressure and still really sort of like it's at the support level that we saw the day after the SEC lost the case to Ripple. We got when we spiked higher up towards about 95 cents, we retraced down to 66.73, and today we've been a little bit lower than that, 66.45. So under pressure, Ripple, along with other cryptos. Let's take a look at the commodities and see. Gold's right on its level. Remember the daily chart, I've talked about this potential for this formation. It's not a classic inverse head and shoulders formation, because classic inverse head and shoulders formations happen at the bottom of a trend. This isn't, we haven't sort of like been in a downward trend for long enough to sort of like say this is a classic formation. So, but nevertheless, if price action is acting like this, there is potential for support coming in around about 1935. Today we've been down to a low of 1930, so that's the lowest level we've seen really since the 12th of July in gold. Obviously all this on the back of dollar index hitting that fresh 4-week high. So momentum stalling, moving to the downside. It's key for gold to hold on to this level today. Let's take a look at the short-term charts. This might be a good one for gun to head. If we look at the short-term charts and ignore the potential for the inverse head and shoulders formation, remember it's still a potential because it's I'm talking about forming a right shoulder here. So we can see that price action has broken down through this short-term support level, and we can look, and we've managed to sort of like get below that 1942 support, which was a low we saw last Thursday. And we've broken down and we are below the Ichimoku cloud, so we are trending lower. Price action over the last 4-hour candle looks slightly more positive, but really that 1930 to 31 level, really if we do break down below there, we really could open up all the way down to 1900. So yeah, one to watch. Definitely, if we get more dollar strength, we should see those lows. Let's take a look at what happened to oil yesterday. You can see the sort of reaction from them oil inventories, a huge collapse in price action. And we're breaking down and looking like we're giving up. Let's take a look at the daily chart just to see what sort of formation. The hanging man candle from Tuesday probably gave us a little bit of an indication that things weren't that, things were starting to stall. You can see how the MACD's crossing over, but the bearish outside candle from yesterday is really significant, and that puts an end to this impulsive move we've had. And we can actually really get some idea where we're likely to see some support coming in. Really, if we look back to the highs that we saw on the 13th, 14th of July, around about that 77.25 level. At 76.54, we've also got a 38.2% fib retracement level. So that's just would be classified as a normal retracement in a bullish trend. So that's looking quite spicy to the downside again. For a gun to head trade idea, looks like there's opportunity there again. If dollar continues to strengthen, that would impact to the downside on commodities. Let's take a look at those forex markets. We'll take a look at a dollar index to start with, and we can see just how significant this up move has been. Let's try and get rid of a few of these. I'll clean this chart up a little bit, and we can basically see this impulsive move lower, bottomed out at 99.58, and since then we've had a really nice reaction higher. Now we can draw some fib lines on. If we take it from that level, we're hitting the 61.8. If we take it from the most recent swing high, we're probably around about 78.6% fib. Yeah, trading around 78.6 at 102.72. So this has been quite an acute angle, really sort of like aggressive move higher, and moves like this can't be sustained for too long. So I would expect some sort of retracement, but dips likely to be bought at the moment with this really strong move higher, likely to carry on based on what's going on the economic side of things in the US. So this obviously leads to a euro dollar moving to the downside, euro against dollar, selling euro, buying dollar. And we can see that price action is hitting a 61.8% fib as we speak, 109.17. This is a key level to hold. It's quite pivotal. Below here, the next support is 108.35. Cable, we've got sterling against dollar. Next support on here, really, one at 125.90. We've pulled back from 131.40 again. A really aggressive, impulsive move lower, dominated by last Thursday's reversal, price action, bearish outside candle, and the break of support. This has continued lower and looks like there's no real sign of any retracement at the moment. Let's take a look at dollar CAD. This is interesting. Obviously, this can be really affected by oil inventories as well. We can see that price action has bottomed out, and let's start to clean this up. We can see we've broken through some pivotal areas. For me, the next real level of support to look at, probably around about, we can take it back here. We can see that previously this 133.90, we'll call it 134 really to round things up, is quite significant, and that should provide a little bit of resistance, maybe a nice target area for people who've built up longs but this will be a bit of a test now. The Tuesday's price action, the bullish engulfing, led to a real strong breakout yesterday as well. But the first real test is this move up to the 133.90 level. If we look at Fibonacci retracements levels, the next major one is 134.40 on there, and that lines up again with this price action that we've seen, which has been quite pivotal previously. So looking bullish on dollar CAD. Short-term price action. It's extended quite a way away from the Ichimoku cloud, so I'd be a little bit nervous of setting new longs around this level. Buying dips seems to be the ideal entry. And looking at even at the hourly chart, you can see how sort of acute this rally has been. So wouldn't be surprised if we get some sort of retracement. Weekly chart, interesting. We had this really sort of strong upward trending support line, which we broke through the week of the Monday, the 12th of June. We retested it the Monday, the week of 3rd of July, and we're retesting again. So this is quite significant, and I would say that we are really looking at that 133.84 level, which was the high for the week of Monday the 12th and the high for the week Monday the 3rd of July. So yeah, upside, a little bit more upside maybe in dollar CAD, but we should see some profit taking or some sellers, some opportunistic sellers stepping into the market. So I hope that's helped, Mosh. Taking a look to see if we have got anything sort of like else, any other requests. No other requests going on. So let's dive into indices. They've had a rough old ride recently. Let's take a look at Germany 40. We can see we talked about this, the real sort of strong break lower after we formed this evening doji star. A really strong sell-off on Tuesday gave us a good indication that there's the correction was likely to continue, and we saw price action breaking lower again, opening lower, gapping lower on Wednesday, filling the gap. 16, 22, 23, yeah, filling the gap almost to the tick. And then we've seen price action again breaking lower this morning. Fibonacci, what's that saying to us on the daily chart? We're through the 61.8%, which is a 15,865. And I talked about this 16,000 level this week and last week has been really key. If we do break down there, it really opens up the downside, and this is looking pretty messy. We've also got obviously earnings figures out as well, so this could get even messier. The Dow seems to have held on a little bit better. 35,208 was the support. We're down below there at the moment, just below it. Nasdaq has broken through the support at 15,378. That looks like a further downside is likely. And S&P's same sort of price action, 4,527 was support. We've tested that this morning and continued lower. So all the indices looking pretty bearish. Really leads us to our next part of the show, which we talk about Asmal Dalal, last gun to head was really good for EU50. Thanks for the free money. Yeah, not quite free if you follow all my trade ideas this year, because our price, it hasn't been such an easy ride. So I do have a bit of an issue in actually putting the trade on live this morning. This is when we pick a trade. Me and Joe normally pick a trade, have a stop and target. Risk reward ratio of 2-to-1 or better. Trades are closed at 9 p.m. unless the stop or the target is hit. As you said, the EU50, we made money on it and it hit the target the very next morning, but we closed it out at 9 p.m. So didn't quite, I think we made just over 1%. I think it's about, we were risking £17. We made about £24 on that trade. It's a £2,000 account. We risk 1% of capital each. And we haven't had a good run at all of late this year since the account's gone live. It's been pretty poor, pretty shocking. But anyway, we're down about 15%, I think. So, but we're targeting like 1% every day. You know, we'll stick with it, see how we get on, and but just prove how hard it is to trade on this, when you're sort of just you're not really planning the trade. We're just looking at markets and picking a trade at market, so not really getting in at ideal levels either. So I'll be able to show you what trade idea I'm going to put on, but because I'm running the stream today, I'm unable to show you the live Oando account because we VPN the actual charts and the streaming software to marry up so that it all works and streams live on TradingViewer and other places as well. So I can't show you the live account because it just won't connect because it thinks I'm in America, but I'm not. I'm in the UK. There you go. Bit of a long explanation. Didn't really need that, Steve. But anyway, let's crack on. Yeah, you can see the EU50 trade here. Yeah, did okay on it, so happy with that. And next day, hit the target. Lovely, lovely jubbly. Would have liked to be selling this yesterday as well, but we didn't manage to get the show done. Potentially could have got stopped out yesterday. Would have been selling it around about 8 or 9 o'clock. It did have a little bit of a pullback. 43.80. No, I might have got away with that. But again, it sort of didn't really break down until overnight. So the price action's happening overnight. So it's not ideal. So let's take a look at the S&Ps and NASDAQs. They're having a bit of a retracement at the moment. So yeah, not the ideal level to get in. We have broken through that support here. So let's take a look. We're just having a bit of a pullback in those indices, and I don't think the timing would be right to get in. However, oil looks like a pretty tasty one. Feels like we're having this potential for a bearish flag type pattern, and I'll be looking to, straight after the stream, short here, targeting a move lower, and we can be pretty aggressive with this after that shocking draw from yesterday. Price is starting to come off. There we go. So that's the sort of trade I'll be looking for. I'll be looking to target a move all the way down there, about 3.5 to 1. Maybe I'll sort of bring it a little bit higher. Yeah, around about that level. So I'll be looking to short crude oil at 79.01. The stop maybe just above the $80 level. So it's a stop, and looking for something around about a 250 tick target. So yeah. Oh, can you see? I was basically, thanks for the heads up. You couldn't see the screen. This is what I'm looking at on crude oil. Seeing this sort of like weekly chart, had a spike higher, posted a lower high, and reversing very sharply. Yesterday's price action, horrendous if you look at it from a technical perspective. The hanging man candle from Tuesday, that bearish outside candle, and I think if we get a break of this support around where we're trading at the moment, opens up a move down here, crossing over in the MACD. 4-hour chart gives us the indication we're breaking into that cloud, maybe a continuation on the hourly chart. I hope that explains it. This is like the bearish flag type pattern. It's not a classic one. It's not a great one, but the price action resembles a bearish flag. So that's what I'm trying to say. Yeah, so getting short around about these levels, 79.03, and the stop will just be above $80. So that's about a 100-point stop or a $1 stop. And I'll be looking to take $2.5, $3 on this. So I'll put it on after the show, as long as it doesn't get smashed in between. But anyway, we'll see. Yeah, lovely. So let's just wrap up with what we're expecting today. Bank of England monetary policy decision, 12 o'clock. Bank of England Governor Bailey press conference at 12 o'clock. US jobless claims at 1:30. US ISM services sector index at 3 o'clock. Remember, the big day tomorrow, non-farm payroll, US employment report and Canadian employment report. That'll add a little bit of volatility to the markets, as if we needed it. So yeah, let's see how we get on. Thanks for joining the show. I hope you've enjoyed it. I hope it's been insightful and enjoyable, and I hope you've yeah, enjoyed the show. I'll see you tomorrow. Cheers.